Hey everyone, and welcome back to another Explainer. I am absolutely thrilled you're joining me today because we are going to be diving into one of the most fascinating corporate evolutions happening in the software world right now. We're talking about the massive structural shift of HubSpot. Now, you probably know them as the original pioneers of traditional inbound marketing, but today we're going to explore how they are rapidly, and I mean rapidly, transforming from a standard software-as-a-service model into an absolute powerhouse of agentic AI. It's a wild ride.
But real quick, before we get too deep into the weeds with the numbers and analyst targets, I've got to give you a quick heads up. While we are definitely going to be looking at some very real, hard financial data and corporate strategies today, this explainer is strictly for educational purposes. It absolutely does not constitute financial or investment advice. Okay, with that out of the way, let's get into it. Okay, let's dive right into our roadmap. Today we're covering 1. The inbound marketing engine, 2. Scaling the sneaker kingdom, 3. The search engine disruption, 4. The agentic AI pivot, and 5. Financial surge and valuation.
Section 1. The inbound marketing engine. All right, so to really grasp where HubSpot is heading, we've got to understand the core philosophy that built the company in the first place. Picture this for a second. You own a bakery. In the old days of marketing, getting customers meant standing outside shouting at people, putting flyers on car windshields, or dropping a ton of money on a massive billboard. That's outbound marketing. It's essentially pushing your message outward to people who might not even be hungry. Honestly, it's like someone aggressively handing you a steakhouse menu when you're a strict vegetarian. It's annoying, it's super inefficient, and it's highly expensive. Well, HubSpot came along and completely flipped that script. They championed inbound marketing. The big idea here is that instead of chasing people down, you create genuinely helpful content. Think baking tutorials, free recipes, engaging blogs. That way, when customers are actually looking to bake or buy a cake, they organically find you. HubSpot essentially pioneered this entire shift, and they sell the exact software that helps businesses pull it off.
And you know, that software isn't just one simple, isolated tool. It is an incredibly robust, multi-hub ecosystem. You've got the Marketing Hub handling emails and social media, the Sales Hub tracking deals, the Service Hub for customer support, and the CMS and Operations Hubs to build out your website and manage all that data. What makes this setup so brilliant is the stickiness it creates. Now, stickiness is a crucial industry term. It basically means that once a customer starts using a product, it becomes practically impossible for them to leave without causing massive disruption to their business. A company might start off just buying the Marketing Hub to fire off some emails, right? But eventually, just to keep all their data organized in one place, they end up relying on this entire interconnected suite to run their whole operation. Once you're in, it is incredibly valuable to just stay in.
Section 2. Scaling the sneaker kingdom.
Now that we've got a handle on the hubs, let's look at exactly how HubSpot actually gets businesses into this ecosystem using their freemium model. Let's make this super concrete and walk through a fictional company we'll call the Sneaker Kingdom. Step 1 is the hook. The owner of Sneaker Kingdom Googles SEO tips for shoe stores and stumbles on a really helpful, totally free guide written by HubSpot. Step 2, right at the end of that guide, HubSpot offers them a free tool, a $0 CRM to track their website visitors. Obviously, they sign up. Step 3 is the grow up. Fast forward a year, and Sneaker Kingdom is a massive hit. They've got 5,000 customers. But they've hit the email limits on that free HubSpot tool. So in step 4, we reach the payday. Because the software is already totally integrated into their daily routine, Sneaker Kingdom willingly upgrades to a paid professional plan for hundreds of dollars a month. And finally, step 5 is the expansion. Another year goes by, Sneaker Kingdom opens a dedicated returns department. Instead of wasting time researching entirely new software from some competitor, they just flip a switch and add HubSpot's Service Hub to their existing bill. You see what's happening here? HubSpot scales its revenue by ensuring its customers succeed and scale up their software usage right alongside them. It is just a beautiful, frictionless alignment of incentives.
Section 3. The search engine disruption. But here is where things get really interesting, because every great business model eventually faces a massive existential test. The entire inbound marketing model we just talked about, it completely relies on people using search engines to find your helpful content. But what happens when people stop searching and start, asking? So the absolutely crucial point here is this. Large language models, or LLMs, like ChatGPT, Claude, and Gemini, are legitimately starting to replace traditional web search. Consumers are increasingly getting direct answers from AI chatbots instead of clicking through endless pages of Google search results. This directly threatens legacy SEO frameworks, and it fundamentally shrinks the organic web traffic that HubSpot's whole inbound marketing machine relies on. Think about it. If Sneaker Kingdom's customers are asking a chatbot for shoe recommendations instead of Googling for blog posts, the whole top of the funnel just collapses. It is a massive structural threat to that sneaker kingdom model.
But listen, HubSpot is definitely not just waiting around to be disrupted. They rapidly went on the offensive. They immediately began adapting to this new era of LLMs by completely redesigning their marketing stack. They rolled out something called the Loop Growth Playbook right alongside Answer Engine Optimization, or AEO tools. These tools literally grade how often a brand's products are being recommended by AI chatbots. It allows companies to optimize for AI exactly like they used to optimize for Google. And the craziest part? It's working. Over 70,000 customers are already using these AEO graders. They also heavily diversified their own internal lead generation, driving a 68% increase in YouTube leads and a 53% increase in newsletter leads in 2025 alone. Plus, to guide this massive transition at the absolute highest level, they appointed Clara Shih, the former CEO of Salesforce AI, to their board of directors. They're taking this incredibly seriously.
Which brings us to Section 4, the agentic AI pivot. This defensive maneuvering actually set the stage for their most radical transformation to date. See, HubSpot hasn't just slapped some cute little AI chat windows onto their software. They have developed a robust arsenal of fully autonomous AI agents, which they call Breeze. First up is the customer agent. This thing is resolving roughly 65% of customer support conversations completely autonomously, and by April 2026, it had surged past 18,000 activations. Then there's the prospecting agent, which completely automates pipeline generation. It has literally doubled the amount of booked meetings compared to traditional manual workflows. No way, right? And finally, the data agent works tirelessly in the background to clean up foundational business data so the machine learning actually runs smoothly. But here's the absolute key to why these agents work so incredibly well. They aren't just working in a vacuum. They are fueled by HubSpot's massive shared context layer, unifying customer records and messaging histories across nearly 300,000 customers. That right there is a massive, impenetrable data moat, and it's driving real, measurable business outcomes.
And this brilliantly illustrates an industry-first milestone that HubSpot hit in April 2026. They actually went ahead and changed how they charge for this software. In traditional legacy SaaS pricing, you pay for human user seats, meaning the more employees a company hires, the more individual logins they have to buy from HubSpot. But when you have AI agents stepping in to do the actual work of human employees, that whole model completely breaks down. So HubSpot boldly introduced outcome-based pricing. Customers are now billed directly for successful resolutions and automated outcomes achieved by the AI agents. Just let that sink in for a second. HubSpot is now directly monetizing software-generated value. They are completely decoupling their revenue growth from their clients' human headcount. That is a total, fundamental paradigm shift for the entire software industry.
Finally, Section 5, financial surge and valuation. So how exactly is Wall Street reacting to all of this metamorphosis? Well, let's look at the scorecard. The numbers are, quite frankly, staggering. For the full year 2025, HubSpot's total revenue crossed a massive milestone, hitting $3.13 billion. That represents an incredibly impressive 19% as reported growth year over year. It just proves that their core product foundation remains rock solid, even when you factor in all the major market disruptions and widespread AI anxiety. And that momentum just completely accelerated right into the first quarter of 2026. Just look at this breakdown. Total revenue hit $881 million, up 23%. Subscription revenue was also up 23%, sitting at $862.3 million. Their total customer base grew 16% to nearly 300,000. But for me, the most shocking figure here is the non-GAAP earnings per share, which came in at $2.72. That is a 52.8% increase year over year. They absolutely crushed analyst expectations by 29%. It was a massive positive surprise for the entire market.
Now, what's really interesting about these growth numbers is where they're coming from. They aren't just adding lots of tiny little customers. They are deliberately shifting up market to capture bigger and bigger clients. In 2025, deals generating more than $5,000 in MRR, which, by the way, stands for monthly recurring revenue, basically the lifeblood metric for any subscription business, those deals grew by 33%. And high-value deals generating over $10,000 in monthly recurring revenue grew by a staggering 41%. Mid-market enterprises are increasingly choosing HubSpot to consolidate their software, buying multiple hubs all at once instead of using disconnected, piecemeal point solutions. And to top it all off, management is putting their money exactly where their mouth is regarding the future of this agent platform. In February 2026, HubSpot's board of directors authorized a massive $1.0 billion share repurchase program. This signals immense internal confidence. When a company buys back its own stock, it fundamentally reduces the overall supply of shares on the open market.
And it essentially screams to investors that the executive team strongly believes their own stock is currently cheap. This provides a really powerful floor for the company's equity value over the next couple of years.
It really has been a remarkable journey, hasn't it? From traditional inbound marketing software to a fully monetized autonomous AI ecosystem. But it leaves us with a fascinating, industry-defining question. As SaaS pivots toward this new outcome-based pricing model, will software revenue finally decouple from human headcount forever? Are we actually witnessing the end of paying for software seats? Well, I'll leave you with that to think about. Thank you so much for joining me for this explainer today, and keep learning.